I'm going to record technical analysis, top-down analysis for gold, starting with the monthly time frame. So on monthly, if I plot the fib retracement from the extreme low level to the highest, number one. So many years ago in 2015-16, the market retraced after making the first high at retraced to the 50% level and then pushed higher. If I'm going to cross check the same thing with the fib extension, starting from the extreme low, so we have 0.618 extension level, which was around 2081, and the market reached this area. Exactly, it touched 2081, which was the highest point. Now after that, let's come down to weekly. On the weekly, we found a double top pattern because the second top is almost at the same level. With bearish divergence. So because of this bearish divergence which was formed on the weekly double top pattern, we had a run to the downside in the gold market. And now if I'm going to check the fib retracement from this low, which was at 1154, let's do one thing. Let's take it from this level because the next cycle, bullish cycle, was started from this low. I'm talking about this cycle. So let's plot our fib retracement from this swing low to the recent swing high. So as per this level, the 50% retracement would be completed around 1558. So this is the longer term scenario. So maybe if gold starts continuing downwards, so it may reach 1558 in the coming months. But what's going on right now? Let's turn it into a line chart, and I'm going to plot the support and resistance levels based on this. So these are the two levels, two lines, two horizontal lines, which are marked on the basis of previous peaks on the line chart. And if I'm going to check the current cycle from the top to the recent most low, you'll find the 50% retracement of the current cycle, means downward cycle. I'm talking about this cycle now. From top to the recent low, the 50% retracement is again coming exactly at 1885. So this could be one scenario. Any which ways, let's see what's going on in the current scenario. Currently, gold is rising up and it has taken support at this weekly level. First bounce, second bounce, and now we are getting the third bounce from the same weekly level. Moving on to daily now. The daily movement is something like this. First push down, a pull up, a retracement, new leg down, consolidation sideways, and final push down. If you check it through a horizontal line, the histogram on the second part is not as low as it was here. So it's basically a kind of bullish divergence, but it's the bullish divergence is not formed on the MACD lines, it's only on MACD histograms. So because of this bullish divergence, we have bullish pressure right now. Now I'm going to check it on 4-hourly time frame. On 4-hourly, it's a clear bullish divergence, very clear on histograms as well as MACD lines. Okay, so after that we needed a break above this high. So what happened? A push higher which broke this level, made a new high, a pullback, and now it's going up. So it has created its first high, which was higher than this high. So it's a higher high, first high. It has created its first low, which is a higher low. Okay, so now it may complete its second high somewhere here around this line, which is 1788, or maybe at the current levels, because we are finding a slowdown scenario here. The MACD is shrinking downwards. So this shrinking in MACD histogram is signifying a slowdown in the bullish momentum, but otherwise we do not have a divergence on MACD lines. Even the histogram, the second histogram is higher, a bit higher or almost equal. Okay, so this is the peak, this would be the second peak of MACD lines, and it's going higher. So this shrinking of MACD histogram is signifying just a pullback, means a small time correction. So I'm anticipating a pullback into this area. It will take support somewhere here and then start rising. So this rise could be towards 1825, or let's see the Fib numbers. So this is the zone 1871 to 1885. Based on the previous downward cycle, this is the 50% retracement level. So it may reach ultimately to this area, it may reach somewhere here in this zone, the previous zone, because we had huge sideways consolidation in this area. Okay, so it may reach somewhere here, which could be around 1835, 1840, or it could reach 1885 and resume its downward trend. Okay, so based on 4-hourly, based on daily, the gold prices, they are moving upward. It may reach 1835 or 1885 in the days to come, and currently let's see what's happening on 1 hour. On 1 hour, it's clearly making higher highs. This is the first push up. So first leg, second, now third. So we are facing a bearish divergence scenario in the third leg now. So because of this bearish divergence, higher high on the charts but lower high on MACD lines, gold is expected to pull back. So that's what I'm saying. It may pull back towards 1740 or somewhere here in this area, which I've marked on 4-hourly basis. as the previous support. And then resume upwards. Upwards, the destination could be 1835 to 1885. And if you plot your fib extension tool on the current 1 hourly cycle, which has started from here, so it has reached exactly to fib extension 100% level, which is around 1770. So it just pushed a bit higher from 1770, made a fake high, see, but it could not sustain above 1770, and now it's moving downwards. So this downward push can bring it down towards 1748 or a bit lower to clean these lows, because it has to clean the orders, the stop losses which are placed here, somewhere here, and then continue higher. So in the short term, we'll look for pullbacks to join the bullish run. In the longer run, once it approaches and reaches towards 1835 to 1850 or 1885, I'll look for bearish conditions, and maybe it will continue lower towards 1550, but that's a longer term scenario. I hope I've given the detailed analysis, multi-time frame analysis, starting from monthly to 1 hourly. Alright guys, take care and bye-bye.